This is Janover Inc., NASDAQ company, JNVR. Janover is a B2B fintech marketplace connecting commercial property buyers and lenders using their proprietary AI. Presenting the company today is the CEO, Blake Janover, and I don't say this lightly, but if you're looking to bet on a management team, you do not bet against Blake Janover. Ladies and gentlemen, Blake Janover.
Thanks, Ross. I know this isn't like an acceptance speech, but since we recently went public, I just want to say thank you to Lafferty and to Carmel Malazzo. Wouldn't have done it without them. Forgive my voice, I'm losing it a little bit. I'll try to keep this brief. I know that they save the best presenters for right before lunch. That's when everybody's paying the closest attention. How's this audio? It's okay? Okay. Let's see how this works.
You got this?
I don't need that. I just need to be able to change the slides. Press the green button to advance the slides. Okay. It's going to be smooth sailing from here, folks. So I'm going to start with the highlight reel. So Janover is an AI-enabled marketplace that connects commercial property borrowers and lenders with a human touch. Commercial property borrowers think I'm buying, building, refinancing, office, multifamily, industrial real estate, and on the other side of the transaction are banks, credit unions, debt funds, publicly traded REITs in our marketplace. Since we started in mid-2019, we've taken more than $200 billion of loan applications on the marketplace. We've had 88 million impressions through our SEO, which is run by a pretty small team of 2 guys. Very excited to scale that team. We've had $600 million of closings on our platform. More than 400 banks and credit unions have joined this year so far. We've had 100,000 applicants, which are users on our platform, which is a real number. These are the highest value professional consumers in America. These are folks that are buying, building, and operating multi-million-dollar commercial properties. And to me, the most important thing, you can have a good strategy, but strategy is nothing without execution. So we have a world-class team, folks hailing from anywhere from Walker Dunlop, Marcus Millichap, the White House, JP Morgan. The list is really long. So I personally have about 2 decades of experience in multifamily and commercial real estate finance, specifically at the intersection with software. I've got a couple $1 billion of transactions under my belt. I've been a lender, I've been a borrower, I've been a GP, I've been an LP. I know the business inside and out. Today we just put out a press release that we hired a new CFO. That's Bruce Rosenblum. He was the former CFO of PetMeds for I think 16 years. Built that company from a 25-cent pink sheet stock to a $57 NASDAQ stock. I'm not saying that we're also going to have a 27,000% return, but I'm not saying that. We're not going to either. I'm just kidding, guys. Our board is highly competent. One of our board members is here, but again, it's a team of stars, which is critical in making this happen. So the market's massive. Let me see if this goes backwards. There you go. The market's massive. There's $4.6 trillion of commercial mortgages outstanding. Our $500 million, $600 million of loans is a tiny, tiny fraction of that total market, and we've just gotten started. There's $2 trillion of apartment building loans. That's material because Fannie Mae, Freddie Mac, the FHA, they kind of subsidize liquidity in that market. That's uninterrupted liquidity. Those loans kept happening during the great financial crisis. There's $16 trillion of commercial real estate outstanding, 55 million commercial properties. It's a big market for us to play in. And when you look just at what happened last year, which is about $800 billion in transactions. We take a tiny transaction fee on every deal that comes through our platform. It's about 1% right now. So if all we do is scrape 1% off that market, that's an $8 billion a year opportunity for us. What if the market shrinks? Okay, it's a $7 billion, $6 billion a year opportunity. It's very exciting as we're just getting started. So the way the marketplace works, I touched on it briefly, but it's a B2B fintech marketplace. So borrowers can come in online, apply for financing seamlessly without having to go through the pains of PDF applications and sending documents back and forth. All of it happens through our platform. On the other side, lenders can sign up, sign in, set up their credit boxes and their loan products for deals that they do and get deals that are right in their strike zone. So it's a win-win for both parties. We take a small transaction fee every time something transacts on our platform. Right now it's about 1%. I'm doing good on time. So the problem is, problem solution, right? So the problem is commercial mortgages are super heterogeneous. You think about a residential mortgage and it's like, this is my DTI, I've got 80% LTV, it's Fannie Mae, it's a 30-year loan, done deal, it gets originated and sold. In commercial, these loans have a million features, and nobody's gone through the brain damage of trying to organize all of them, all of these loan products into one place until now. The process of connecting commercial borrowers and lenders is highly frictioned. You could have a credit union in Indiana that wants to do industrial loan in Washington, D.C. They're willing to get really sharp, really creative, but these guys have no way of connecting until now. And it's on our proprietary platform built from scratch, specifically to solve this niche problem. Timing is really interesting right now. So the adoption curve has accelerated because of COVID. So now all these high net worth professional consumers know they could do transactions online, know they can bank online. Rate increases, bank failures, this has caused disruption and fear. And what do people do? They go out and they want to see what else is out there. What other loan options are out there? So borrowers are out looking for other options. Lenders are out looking for new borrowers that fit their new box. And our digital mousetrap, our SEO with 80+ million impressions over the last 12 months, that's where we're capturing these folks. They're going online and they want to see what else is out there. We have a bit of an unfair advantage. We have a proprietary customer acquisition and distribution mechanism, which is this online platform that we built, which also gives us a cost advantage in acquiring customers and monetizing deals, and we benefit from network effects. Every time a borrower joins the platform, it makes it more valuable for lenders, and more lenders join, which makes it more valuable for borrowers, and it's a virtuous cycle. We currently have generative AI running across all of our applications and all of our borrower and lender-facing engagements in email, SMS, voice, text, full qualification, customer service, complex sales with very high empathy conversations happening in real time. It's insane to watch. We're reporting quarterly now that we're on the NASDAQ, but we're building for the long term. So right now, now that we're public, we're going to hire stars, guys like Bruce, who came out of PetMeds that I just explained. We're going to build new platform partnerships to be the get financing button everywhere on the internet for commercial property financing. There's a lot of M&A opportunities out there with prop tech financing down 77% year over year. We're going to keep leaning into our AI and generating network effects as we grow. We've been growing the number of lenders that we've closed loans with at an 80% CAGR since inception, and we're on the NASDAQ. I think our last price was about $1.30. There's 10 million shares outstanding, a $13 million market cap, which gives us a pretty low EV, maybe around $6 or $7 million. I own almost 60% of the stock, haven't sold a share. I'm in it for the long haul. And that's it. Thank you.